Deepak Mittal, the MD and CEO of ECL Finance Edelweiss. Thanks so much, Mr. Mittal, for joining in. Congratulations. We understand CDPQ, of course, is going to be picking up a stake in the company. $250 million is what they're going to be investing. I think that's about 1,767 crore rupees. So first up, how much stake is CDPQ picking up via this deal?
Thank you, first of all, this is extremely important transaction for us. From a credit business point of view, we're normally looking for three key things: strong equity base, a very credible long-term partner, and third, alignment on the long-term strategy. And I think with the transaction, we are ticking the box on all three. As far as the stake goes, I think we'll disclose in our investor relations also presentation also. It will be a mid-teen. It will be a stake in the range of teens. Most probably somewhere around the mid-teens.
You're issuing convertible debentures, to CDPQ. So basically, what is the valuation of the business? That's what I'm trying to understand over here.
I think we've put it out in detail in terms of what is the investment and what is the range of stake available. So one can back calculate what are the numbers which add up. So I'll leave the maths to analysts for them to do their job. But clearly, I think for us, given the stage of expansion we are, having an investment of this size from a marquee investor like CDPQ is extremely important. It positions us very well for our growth strategy. We are looking to increase our businesses both in mortgages as well as in SME. Significant investments required in terms of expanding our reach. A lot of investments in technology, digital and analytics. And it positions us very well, even if there are consolidation opportunities in the industry. If they come at the right fit and right price point, we'll be very happy to look at them also.
Okay, so Mr. Mittal, we on our part did do a little bit of back calculation. 9,500 crore rupees. I think that's where ECL Finance's valuation is. I mean, am I warm to that figure?
Let me not comment on that, on the mathematics. I'm sure you would have done a correct job of that. So.
Okay, all right, Mr. Mittal. I know you mentioned consolidation. That was one bit that I gathered from your previous answer. But what else will you be using the proceeds that you'll get from this deal?
So if you look at over the last 4-5 years, we've expanded significantly on our presence as we've expanded our retail footprint. We now have around 100+ points of presence across the retail credit space. So we will continue to expand on this, especially tier 2 and tier 3 cities. They give us a lot of opportunities. I think the second thing we are definitely looking to invest is in investing in our digital initiatives, technology and analytics, both in terms of understanding what the customer needs are, in terms of reaching out to the customer through the digital medium, as well as analyzing risk and early warnings of risk. So those will be two focus items for us from an organic growth point of view.
And from an inorganic growth point of view, are you going to be looking at any, acquisitions to sort of help your expansion plans as well in the tier 2, tier 3 markets like you mentioned?
Clearly, if an acquisition opportunity comes at the right price point and is the right strategic fit, we'll be more than happy to look at that. And clearly, this investment gives us the leeway on the equity capital to look at some of these acquisition opportunities.
All right. Mr. Mittal, since we have you, we would love to get in your sense on how the industry dynamics are panning out currently. What's the outlook like? And more importantly, on the very contentious liquidity front, I'm sure you'll be aware, of course, that was a major fear among market participants, among analysts as well. So over the last few weeks, how has that entire environment over there panned out?
I think liquidity was particularly tight around the end of September, the Q2 period. I think after that, liquidity has actually significantly eased, and while there is some more room to go for it, but I think concerted action by the regulator, and also as people got more comfort around NBFC's ALM risk, I personally think some of the risks were perhaps overstated, and while some of them might have been around, but clearly I think the industry has stood the test of time fairly well. A lot of short-term borrowings got repaid without any delays at an industry level, and I think as slowly, I think the investor interest as well as on the debt side on the banks and mutual funds, their interest is coming back to the NBFC space. We also did our own bond issue, and that was subscribed pretty quickly, and I'm sure a lot of other NBFCs are doing the same. So I think liquidity, what it was in September to now, is significantly improved, and I continue to see it improving as weeks and quarters pass.
Okay, all right, and I think the fact that your bond as well were fully subscribed is proof essentially of how the entire situation is normalizing. So post this financial ammunition, if I may call it that, from CDPQ, all the plans that you've mentioned on how you plan to use these proceeds, what are the targets we can watch out for ECL Finance for the coming year? That's FY20, FY21. Any internal targets that you would like to achieve?
So I will not be at the liberty of disclosing specifics, but we have clearly stated retail is a big growth engine for us. In particular, we look at the mid and the small enterprises as a big growth vector for us. I think on the mortgages side, especially on the affordable housing, there is a huge opportunity, largely in tier 2 and tier 3 cities, as well as in suburbs of large metros and large cities. There's a huge opportunity in terms of meeting the need of people who are looking to move into their new houses, and those two will be very big growth vector for us.
Okay, so retail is naturally going to be a big growth driver. Thanks so much, Mr. Mittal, for joining in. Congratulations once again on the mega deal, and we wish you all the very best for ECL Finance going forward.